All right, good morning, everybody. Continuing to see some activity in the small caps space, the Reddit crowd getting a little activity. Really seems like we could get like a short covering rally. So I've got a small list of things I generally look at when this starts to pop up. Um, this isn't necessarily a trading list, it's more of a bunch of tells, signals. So there's ETFs like IPO or CALF, CAF. COWS is another one, COWZ. If you open those ETFs, and if you're new to all of this, an ETF is just a basket of stocks. Open that basket up, look at the names within it, and you kind of get a feel for the names that are moving around. It can point you in the right direction towards some activity. And if you look at the change, this is still reflecting yesterday's change, but EXT is extended hours, so we can see what's moving in the pre-market. The IPO, then there's growth versus value in small caps. It's like SLYG, SLYV. There's an ETF called TOPS. That's not small caps, by the way. It's just we are seeing more and more activity in the small caps space. Look at small caps up this morning while everything else is basically flat, waiting on a catalyst. Hong Kong, flat. Japan, flat. Europe, yeah, I mean, they were in the news this morning. UK is basically flat, and then you got the small caps, 0.75%. The Dow at a quarter, S&P and the NASDAQ twiddling their thumbs. We're going to get some more unemployment data. Look at these two numbers. That is a significant differential. All right, the previous number was 37,000. The forecast is 100,000. One, if we don't get the mean estimate, markets are likely going to react. Two, even if we do get the mean estimate, the markets are likely going to react simply because of the differential. So watch the clock. This is one of the odd ones, 8:15. Most of the time when we get economic data, it's on a half hour or a new hour. It's one of the reasons I say watch the clock. There are so many economic events that happen every day. We go through 3 pages of economic websites showing all of these different economic events, and we still don't find them all. You will never find them all, which is why I argued don't even try. There's economic events that are happening all around the world, and they can be as simple as how much grain was shipped out of the New York harbor to how many rigs were stacked. There's a lot of them that they just go through and nobody pays any attention to them because most of the time they don't cause any issues. But there are times where they do, and rather than trying to hunt them all down, especially the obscure ones that most people don't pay attention to, just watch the clock. You're going to see increased flows on the half hour and the new hour. And when we have days like this with quarter hour events, you're going to see flows even on the quarter hour. You won't find them all, right? So this is a wide gulf. Keep your eye on the clock, 8:15, see what we get. Would not be surprised if we get a liquidity gap this morning. European Central Bank, Christine Lagarde's going to be chipping teeth. It's Wednesday, so we're going to get crude oil inventories. With a short week, we should also get the gas inventories. And then tonight, we'll get data out of Japan. The bill left the Senate They're already saying that the Senate made more changes than the House was comfortable with, and that all of the House members are not back at the House. Some of them are having weather issues and on and on. So prepare for some shenanigans when it comes to the bill. And then yesterday, the administration started chipping teeth about rice and Japan and the July 9 deadline for tariffs. At the moment, they're calling their bluff, and we don't have, a bunch of new trade deals. We're supposed to have a whole pocket full of them, and we've got possibly two. We don't even have two yet, just possibly two, and the clock is ticking. So when we continue to think about what could go wrong, those are the two, right? The bill and tariffs. The call wall was rolled up, and the put wall was rolled down. See if we can. I took a picture of it. You should have seen it in the chat. Just get logged into Spot Gamma. It's a little pricey. Spot Gamma doesn't really offer many events, like Black Friday sales, holiday sales, that sort of stuff. They don't offer very many discounts. So if you find one, grab it. So go to indices, scroll down to the bottom, and you get to the SPX historical chart. Just open that up, expand it so everybody can see. I like to just turn off everything that I'm not trying to see, which is price and the volatility trigger and zero gamma index. And once we do that, just tighten up the time zone a little bit. Calls are in pink, puts are in blue. You can see that the put wall was rolled down from 63 to 59. That's a good size roll to the downside. And, or from, from 62.35 to 59, which is a good size roll. And calls were rolled to 6,300. Right. So by itself, it's just one data point. But we do consider a call wall getting rolled up as bullish and put wall being rolled down as bearish. We would want the put wall to either stay where it was or roll up with the calls if we were looking for a bullish bias. So those two, they don't even necessarily cancel each other out either, because well, the puts were rolled down farther. That's one piece. But if we go back and look at other examples where we had, one roll up, one roll down, even without price being turned on, we know that price went down here. So the calls went up, the puts went down, and price went down. Those calls going up didn't help anything, right? So that's what we've got right now, this change in the call wall and the put wall. We are still above all the major moving averages. So 4, 10, 20, on and on and on. The volatility trigger and zero gamma. And I made some adjustments to the Thinkorswim platform yesterday. So if it looks a little different, that's why. I tried to make the numbers bigger, or when I use my menu. I mean, geez, I'm not necessarily blind, but even I can see that. And then tried to change the color tone a little bit. We'll see if it helps. So we're still riding above that 4-period moving average. If you're a confirmation trader looking for a trigger, it would be to break that 4-period moving average. If you're on a smaller time frame, try like a 12-period on the hourly, something like that, maybe a 10. Could do an 8, it's a bit aggressive. But on the hourly or the half hour, if you want to take it on the intraday. All right, we're still within the ADR. This is the average daily range for the day. We haven't hit either side, so no real edge there one way or the other, since we're basically flat. The range that we were dealing with yesterday is still in effect. Sure, we broke out of it in the Globex last night, so you can argue that we broke out of yesterday's range. I would say that we broke out of the range on the week. Right, both of those would be true statements. One just has a different context to it. The main thing is it didn't hold. Whether you're focused on breaking out of yesterday's range or the week's range, doesn't matter. We didn't keep it. We're back inside again. So GTFO, right? We got to get out of this box. Otherwise, we stay in the box, we're just going to chop. We again tried to expand our distance from the weekly floor pivot. Didn't work out. Turned around and came back in again. That's been my argument all week, is that we opened, expanded away from this floor pivot. We were already a considerable distance, and it's hard to continue to go from there, right? We can. It's just going to take a lot more work to rally after already being this far away. And if we don't have the push, then we just come back in again. I guess the analogy would be the amount of gas pedal it takes to drive down the flat highway versus the amount of gas pedal it takes to start driving up the hill. If you want to keep your speed the same, you're going to have to put in a little more effort. We don't have an MDP because we've already hit it. And we made it to R1, but we couldn't keep it. So there is something called an R1S2. It's an older floor pivot type trading strategy. And we've already did the R1. So if we were doing an R1 to S2, that's what we would expect today. To do that, we would have to break out of yesterday's range. We'd have to break out of the range on the week, I believe. Yeah. Here's Monday's low. So we'd have a new range on the week, which is possible. You know, we already got a new range on the week when we broke the upside. Why not do the same thing in the same day to the downside? It's 62.11 cog line. Of course, to get there, we've got 62.50 in the way, 62.32 cog line, yesterday's low, Monday's low, the gap, and then the 62.11, which is S2. What's up with Think or Swim suddenly? There it goes. Slacker. All right, the distribution on this chart really shows how we haven't done anything all week. We're pretty constricted. Everything's underneath us. So 6250 is not the line in the sand that we would expect it is, at least looking back at what we've gotten so far this week. I would still keep my eye on it. It's a big options level. But 6242, which is an old cog that I don't mark, is where the point of control is. So getting back inside that value area very likely traps us in there, and we develop more of it. Getting out of the downside, 6150 has been the line in the sand that we've talked about a few times this week as the lower point of control to focus on if we give up this distribution up here. A lot of things that we would hit on the way down, a lot of cog lines, big options levels, but it gets kind of shallow, so we don't have much of a footprint. $10-day, 30-minute volume profile in TPO. We talked about getting the point of control moved up here yesterday and how we wouldn't eliminate these candles for at least a week. So we would have to stay in one spot and build the volume out enough to see that point of control get moved up. And it did. So we're there. We're going to continue to lose candles along the lows. So we're going to wipe out this volume down here. That's going to have no effect on where we are right now or that point of control. Now that we're in this zone, this point of control is not going to act as a support or resistance. It's more of just a zone. So we can cross back and forth through this point of control. No borders, right? Go right through that, no problem. The problem will come if we leave the range and then we come back to it. So from here, if we dip down out of that box and then we try to come back at it, it'll act as a resistance. Same thing the other way around. If we break the box to the upside and we come back into it, it'll act as a support. Until then, if we're just chopping around it, then it's just going to act like a gravity or a zone. We're going to just stick around. The longer we stay sideways like that, the more structure this level has. Think about it from the opportunity of a ranged market like this. Everybody thinks they're right. And they don't know if they're wrong yet because we haven't done anything to prove them wrong. So shorts will get in thinking they're right. Longs will get in thinking they're right. Everybody's going to put their stops on the outside of the box and wait for the break. Right. So with that in mind, we call this a draw because it's drawing everybody in. All the stops would be up here, right? If you're short, all the stops will be down there. If you're long, everybody just looking for a break. Well, this liquidity that gets stacked up becomes structure on its own. We'll start to see that in the queue because those are potential trades that haven't happened, right? They're stacked up stops. So we'll see it in trade activity in the queue, pulling and stacking as they adjust them. And eventually they become barriers that we've got to get through. My TPO is missing. No VPOC for today. We've already hit that level. Tested our own Globex low, crossed through it at the open, and we crossed through it later in the day. Looks like we're going to get a chance to test it again. Not much of a discrepancy between the TPO and the volume profile this morning, other than the value area is much bigger. We're encompassing the whole thing, and TPO is just capturing this lower area. So wouldn't be surprised to see that tighten up as the morning goes on. I wouldn't expect that value area low to offer us any help. Instead, focus on the Globex low, right? And if we lose that, then we focus on yesterday's low and on we go. The main thing here is we don't have a VPOC for today. We're still 4.25% above the 10-week. So from a perspective of health, everything's fine. We're continuing to fade back off of the highs. We don't have any issues with the 10-week. And on the 10-day, while we did break out of the zone and we got a little high, we're coming back in and it's not extreme. By extreme, you can see how fast we can go from, like a +2 all the way down to -1.5 in a single shot, right? We can get some extreme moves here really fast. And we're not seeing that, right? We're seeing a gradual stair-stepping decline lower, which is nice. It's a gentle pullback. This is a correction and a needed one. It's good to correct without just crashing and burning. When we focus on this week's range, that was the expected move for the whole week. And so far, we're using about half of a single zone. The zone being from Friday's close to the upper edge or from Friday's close to the lower edge. And we're just using around half of that zone. 62.50 is where we're getting hung up. These wicks tell a story, right? From an analysis standpoint, every time we get into that level, it's been defended and we haven't been able to get through there and we sell back off again. How many times are they going to put in the effort and not get the reward before they give up and try something else? Now, there's a couple of ways to look at this sort of behavior, right? If you think about it from, say, a box of pizza, every time somebody reaches in and grabs another slice, you diminish how many slices are left until eventually you don't have any pizza left. If there's liquidity up here that we could consider like pizza, every time they're dipping in here and grabbing another slice, they're just taking more and more of that liquidity until there isn't any left. And then since nothing's holding price back, it can make it through. That's one perspective. But if there is just so much liquidity up here that they can't get through it, eventually they're going to throw up their hands and try something else. I call it the stuck door method. What do you do when you try to go through a door and it's kind of stuck? Well, you back up and put your shoulder into it and you give it a nice little run, right? When price hits a level and it's stuck, it tends to back up and give it another go. So they're giving it a shot. If they're not able to get through it, very likely we're going to see it take a bit of a pullback. We'll see if they put their shoulder into it. Very nice. All right. We still got the Globex low to focus on, but that brought us down to the floor pivot, 62.45-ish. Be mindful of VWAP reciprocation. And in 20 minutes, we're going to get data. All right, looking at things that are down this morning. China, bonds, chips, although not enough. So basically China and bonds. Need a little bit more out of it. Lots of stuff that's sideways and things that are up enough. Bitcoin, lots of Bitcoin, solar, energy, VIX, finance. Not what we want to see. If we're looking for a bullish run, then we want to see, the Mag 7 and chips and consumer discretionary and those sorts of names. And that's not what we have here. So not what we're looking for. And this is more of a capital rotation. And is not going to work out if we're looking for a long breakout. So obviously this can change. We can, having Bitcoin up is good. That's one that we need, but we don't have the others. So they can get into the game, start giving us a push to the upside. But that would mean they need to climb out of the hole first because we've got chips that are negative right now. And tech, although it's negative, but not by much. Retail was getting some good flows yesterday. Keep your eye on those today. See if we can get a little bit of a follow through, especially if we're not going to get anything else, right? If the market's still waiting on, bill and tariff talk, then got to focus on something. Bitcoin should be a good play if we're going to get a continuation there. There's a lot of Bitcoin names that we could focus on. There's a bit of a discrepancy between the banks and just generically the XLF. So watch that space, see if we can pick up the laggards. But really, the sideways market structure, it's not hurting us. We don't have a lot of stuff that's down. We just don't have a lot of stuff that's, up more than 0.5% yet. Precious metals picking up, silver's in there, gold miners. But, we don't need a rally on solar and pot stocks. So we need that to turn around. IWM's giving up more and more of that pop that it had. So if we're looking for that small caps play or the hedge fund factor rotation and short covering rally, this isn't not a good tell. All right, so it's simple enough at this point. Get out of the box. That'll start with our own Globex range, then yesterday's range, then the range on the week. If we measure all of yesterday, there's the halfback. 62.44. So if we can get through the halfback, just on and on we go. Yesterday's RTH open 62.32 cog line basically be the next level down. And keep your eye on the clock because at 8:15, which is an odd one, we're going to get data. And the numbers are wide. There's quite a bit of a discrepancy there. All right, so be careful, be safe. I'll see y'all tomorrow.